I was wrong about Peloton stock, and I will be the first to admit that. In this video, I'm going to explain a few things that went wrong with my Peloton investment and how you can use the things that I've taken away from this mistake to possibly help you with your investments and maybe find companies that you can cut out before they see significant losses. Now, to be 100% clear with you guys, I have sold out 100% of my Peloton stake in a couple of tranches here, and the net result from this sale is a realized loss of negative 53.14%. Now that kind of loss is no joke. And Peloton here is by far the biggest loss that I've taken in my core portfolio. It was definitely more of a riskier type stock, but you know what? I believe their story. I bought in. I had a good size allocation that I was comfortable with, and I was just wrong with a few things on my thesis, which I will explain in this video. Now, technically, I didn't really lose 53% because as you can see here, I posted on Twitter, I did open up a sizable hedge before earnings, which will help soften the blow here. With that being said, I'm still realizing a loss. It's still a good amount of money, and it definitely taught me a few things and was a good learning lesson for my investment career. So I wanted to make this video because I didn't want to just hide in the dark, pretend like this never happened like some YouTubers may do. I want to be upfront with you guys. I've made tons of videos on this stock in the past. I've been vocally bullish on this stock, and I was wrong. I was wrong with quite a few things in my thesis, and I really hope that, you know, whatever you get from this video helps you become a better investor as well. Now, let me first talk about, you know, some of the numbers that made me question this and got the wheels turning on whether I should be selling or not here after the earnings report. And really, this is looking at the fundamentals and looking at the fundamental thesis and realizing that things have changed for the worse. So here are some highlights that I posted in my Discord. You can pause, read through this. I'm not going to go through every single point, but the highlights here, the takeaway should be that, you know, for their connected fitness subscriptions, they actually had growth slower right now than it was pre-2020. So, you know, before everyone knew about Peloton, they had better growth than now when everyone seems to know about it. And what shocked me on top of that was that their hardware revenue declined significantly and again was worse than it was prior to 2020. And while I was totally expecting a slowdown from 2020 numbers to 2021 numbers, like most investors were, I was definitely not expecting poor results when comparing to 2019 numbers, because 2019 was like a different type of business, right? Peloton, yeah, it was a great brand, great company, all that stuff, but not many people knew about it. 2020 just kind of put it front and center. A lot of people knew about it. A lot of things that I'll talk about in a second changed for the better for the business. So I was expecting better numbers compared to that year. Well, that didn't happen, and that just showed me that while people may know about the brand right now, they aren't rushing out the door to go purchase their product, and that's a problem. Now here, objectively speaking, the numbers are kind of mixed. The connected fitness subscriptions that they had did see good growth, near 100% year over year, which is strong. However, kind of the core of this company right now, which is their actual physical products, their hardware, saw declines, and that is an issue. It's clear to me now that the decline in their hardware sales is not just, you know, an issue we can just kind of throw off to the side and it's kind of its own issue. It actually directly affects the subscriptions as well. And if they can't get people to purchase their physical hardware, they have a very hard time convincing people to sign up for any sort of subscription. So, you know, they kind of go hand in hand. You need both of them to be growing significantly to have this business succeed at this point. Now, additionally, there were quite a few tailwinds that I thought would help this company tremendously in this last quarter, which was completely off base. The first is that they ramped their advertising spending by 148% year over year. They spent almost $300 million on advertising and marketing. And I mean, I saw a ton of Peloton Tread ads on TV, YouTube. It was all over the place. So that was the first thing that I was like, okay, they're advertising heavily, they should see good numbers. Not necessarily. The second is that they expanded to new markets like Australia in July, so I was expecting, okay, a new market opened up, they should see a lot more demand there. Numbers should be strong. Apparently not. Also, the other big thing was that they should be benefiting from the publicity of their brand. That net promoter score, the NPS number we see thrown around a lot, you know, people recommending the product. Apparently that's not the case either. And then the cherry on top, they now have two products that they're trying to cater to the market with, and it still didn't seem to be enough to continue with growth for this business. I was expecting, more products, more revenue naturally, but not the case. So Peloton here, what they did was they pulled the levers that they had available, going all in with their spending and that kind of stuff, but they just could not deliver at the end of the day. They ramped up their spending in an effort to sustain their growth, which hopefully, while they were spending, they were like, okay, this should result in good growth year over year. We can show the street good numbers. Everything should be good. But the end result was that they just spent a whole bunch of money. They burnt a bunch of cash. The company still declined year over year in terms of their metrics. And they ended up hurting their gross profit margin significantly, guys. It dropped like 20% year over year. On top of all of this, because they burned so much money, their cash balance now is a lot less than before, and there's doubt that they may dilute, raise debt, do something to raise more cash at this rate. And even though they assured us on the conference call that they don't plan to dilute or anything like that, a couple quarters from now, if things are going the way they are, they're going to be forced to, unless they want to declare bankruptcy. They expanded to new markets, they released a new product, and they cut the price of their most popular product, the bike, by $400. And they have such a strong net promoter score, but they still could not grow year over year on the metrics right now that actually matters, which is their hardware, and that is a problem. The company also lowered guidance quite significantly, going from like 5.4 billion to like 4.4 to 4.8 billion, so quite a good revision down there. And this just tells me that they expect this sort of weakness to continue well into next year. This is not just a one quarter thing. This is going to be something that the company is going to face for quite a while until they finally get their things back together, their finances back together, and people start purchasing their products once again, because right now, it's just not happening to the scale that the market expects. They also expect upwards of $400 million in losses next year. And, with interest rates rising, the market is definitely very, very sensitive to this metric. So when they saw almost $500 million of losses for next year, it doesn't bode well for Peloton stock. And that's why, it's a big reason why the stock dropped so significantly after earnings. And really, the conclusion with this earnings report, there was nothing good to say. They had a lot of issues. They confirmed the doubts that investors like myself had. And when you think back things like that price cut that they did, the $400, I was vocal and I was like, hey, I think maybe this is a good move. It's going to help increase their reach. A lot of people should sign up for this. That didn't necessarily happen. They were not able to capitalize on that cut. It was definitely now hindsight, a defensive move for the company. And I can't say that I'm as thrilled to be invested in a company where their main product isn't something that consumers want to purchase. The other thing I learned, guys, with this investment is that NPS score, that net promoter score, throw it off to the side. That thing, it's good to look at, but it's definitely not something you should put into your investment thesis and have as a heavy weight in your investment. Peloton has a very strong net promoter score, but it's not materializing to anything. So it doesn't really make a difference to me at the end of the day, whether a 90 net promoter or an 80 or 50 or 20. I want to see the metrics. I want to see the revenue growth, the cash flow growth, the profit growth over time. And those metrics are disappointing despite their high net promoter score. And ultimately, with this investment, it came down to me losing confidence in management. I did not like the significant reduction in their outlook for next year with their revision down and big losses. And I just think that they made very poor decisions with their marketing spend last quarter. They took a risk, it didn't pan out. And I think, if they know that last quarter was seasonally going to be the weakest one of the year, which they keep saying it is usually every single year, that quarter is the weakest. Why would you not just save that money, spend it in this quarter when they seasonally have the best time of year? And at least you'd have a lot more cash on the balance sheet and investors wouldn't see massive losses from last quarter. So I don't know, maybe that advertising spend actually helped the company a little bit, in which case I'd be even more concerned, because if you're spending hundreds of millions of dollars on advertising, I would expect to see billions and billions of dollars in revenue and eventual profit, because otherwise the equation just doesn't make sense. But guys, here I've been pretty harsh with Peloton. I think there are still some positives with this business. So if you're still invested in the stock, there is still some light at the end of the tunnel that could turn things around. For one, the connected fitness market is growing, and it's substantially going to grow over the next few years. And Peloton, I believe, is the leader in this space. They have the strongest brand in this space. They have the best products and the best community in this space. So I think that they will just keep growing with this market. But what I think they're going to struggle with, and we've already seen this happen so far, is getting people to adopt their product. Unless they, go completely to a subscription type company like Apple has with their Apple Fitness Plus, the hardware metric is always going to matter with their investment. And, with them putting a whole bunch of money into a factory here in the US, it's clear that they're doubling down here on their hardware. So we need to see those numbers increase, because all those investments that they're making need to eventually see a return over time, because they are using a lot of money to build that factory. They are betting big on their hardware, and investors need to see it actually make sense. The other thing is that Peloton now owns Precor, and because of that, they're going to have access to the commercial sector. They're going to be able to sell to hotels and stuff. And they also have, their corporate wellness that they're growing, and that's another segment that could help them grow quite significantly over time with subscriptions. So these are definitely things to keep an eye on, because those could be bigger growth drivers for them going forward. But guys, despite the positives, I think because of what they reported, market was just not happy, and I think the stock is going to see a lot of pressure in the next quarter or two, and investors are going to wait to see if they can actually turn things around. Like I said, this quarter that we're in right now is seasonally the strongest for them, so there is definitely a bar that they need to meet, and if they don't, that'll be quite concerning for existing investors. I think at that time you'll see another huge dump in the stock. But to me, guys, my thesis changed on this business, and I decided to sell out because of the reasons I outlined. As you know, I rarely sell out of my positions. In my core portfolio, guys, if I buy a company, it's one that I have high conviction in. It's one that I'm going to put a good amount of capital into, and it's going to be one that I average in over time on dips, on rallies. It doesn't matter. I'm going to dollar cost average and build that position out. But here with Peloton, because my thesis changed, because I lost confidence, and because my position was down 50% plus, I was like, what? Let's just take advantage of this. Let's sell this, realize the losses, and actually use that against gains that I have. And like I said, I don't typically have a lot of long stock gains. But if you're a part of the VIP group, you guys know that I'm very active now with options and option selling specifically. And I made quite a bit of profits through that. So the losses from Peloton should help offset the gains that I've made from, options trading and that kind of stuff. So at least I'm getting some tax benefit here. Don't get me wrong, still sucks losing money, but hey, gotta put a positive spin on this, right? I also want to quickly stress upon the importance of diversification here and kind of sorting your portfolio by your conviction level. I was definitely one of the biggest bulls here with Peloton on YouTube, but I always had this as a control position in my portfolio, never made up more than 2 to 3% of my entire portfolio. So even with this significant drop, half my value gone in this position, the winners like Tesla, Nvidia, Salesforce, those companies, they are more than making up for it. And I think that just shows the importance of being diversified in your portfolio. Peloton carried some risk, they still a smaller business, they were still growing, there's still a lot of, story to really play out over time. And I personally don't own their product and don't plan to either. So I didn't really have the personal confidence to put a huge amount of capital into it. But hey, money is money, a loss is a loss, and that's just the reality of the situation. Bottom line is my portfolio is still pushing new all-time highs, even with Peloton being down here and kicked out of my portfolio now. So please do not go all in on riskier type stocks like this. I also want to make one more thing clear, guys, before we end this video. Just because I'm out of Peloton now does not mean I'm never going to buy this stock again. If the story improves in the future, I am more than willing to open up another position in this and ride the story once again. I think it'll take some time, like I said, but I do think that in 5 to 10 years, this company can be a very, very profitable company. They can be a very subscription-focused company, which would change the narrative to much more positive. And they can be a business where I feel comfortable putting more than a couple of % of my capital into. But until then, unfortunately, I'm not a Peloton shareholder anymore. I believe the company has a lot to prove out to investors. They're in defensive mode now. They're cash strapped right now, and there's just a whole lot of uncertainty with the business, which I think needs to play out before the stock can ever see triple digits once again. So guys, I hope my reasoning for selling out of Peloton was clear. If it wasn't, leave a comment down below. I'd be more than happy to answer your questions. And if you are still invested in Peloton stock, I wish you all the best. I don't want to see anyone lose money, and I know it's unfortunate that these things happen, but hey guys, I went down with the ship as well. That's just the reality of investing, but we just get back up, realize what we messed up on, fix those mistakes for future investments, and make better decisions moving forward. Anyways, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.